wish you would've stayed home. Run into a group of suckers who getting their hate on. You won't buy, they get wrong. You reply, then things get blown. Way out of proportion, way past discussion. Just you against them, pick one in Russia. Figure you'll get jumped here, that's now. They don't wanna stop there, now they bustin'. Now you gushing. Ambulance rushing you to the hospital with a bad concussion. Plus you hit.
Hey, it's Saleh, and this is episode 548 of the Orange Pill Investor. And today we're going to have a quick little chat about Bitcoin Core's latest disaster. Apparently, they did not realize that there were some bugs in the software, and this probably doesn't apply to most people unless you're like an old school Bitcoiner and you literally used Core as your wallet. Most people probably have like some actual cold storage device. I have heard a little bit of pros and cons about that, or about whether it's better to just use a literally like use a personal laptop and just try to keep your information secure. Some folks have lost their Bitcoin going that route as well. However, if you were using an old wallet, then if you didn't have your seed phrase backed up, there was a potential for actually losing your Bitcoin. It would delete your wallet. It was supposed to transition to a new wallet, and you would think that you would double check to make sure that the new directory was installed successfully before deleting the old directory. But there was some weird series of events. If you did this before that, etc., then your old wallet could actually be deleted, and there's no new, and the new directory failed to install properly. So it's pretty embarrassing. A little bit of egg on your face. Bitcoin Mechanic, who has been opposing Core vehemently, but with some kindness, even like he's willing to debate and argue the points, and he's kind of willing to give the benefit of the doubt to some degree. He actually put a video out saying, hey, this does happen. And while it's kind of like a little bit of a karma thing, because Core has not been listening to the users. Core has been basically defecting against the community, and this bug was reported before they even went live with V30. But of course, when an organization is in late stage collapse, they are no longer the open, collaborative entity that they used to be. And now it's like, trust the science, bro, type shit. A lot of the times people will the Core folks will be like, oh, well, all the people who have takes, filter takes for knots, or they're not technical. And, you got to listen to the technical people. You got to listen to the devs. And that won't necessarily work, because in this case, the devs fucked it up. And it doesn't appear that Knots was affected. It could have been, right? It could easily have been. And there are bugs in Knots, but even with the smaller team, this particular bug was not vulnerable in Knots. And Core's got hundreds of developers at this point, and there's something to be said for when every empire reaches a certain size, it starts to believe its own bullshit a little bit. So I think there's a little bit of that going on. And I like the combination of Bitcoin Mechanic and Matthew Kratter, because Mechanic is much more conciliatory and level-headed, and Matthew Kratter has literally just nuked the fucking playing field. He is implementing Total War, and I'm here for it. It reminds me a little bit of, back in the civil rights movement. Were you an MLK guy or a Malcolm X guy? And mechanics MLK, and Matthew Crowder is taking the Malcolm X route. So I'm here for it. I'm enjoying both of their takes. I think they're both on the right side of it. They're definitely taking different tacks, and I'm actually really enjoying the Total War side at this point. Cork can fuck off and die for all I care, really. There's probably still some good devs there, but they clearly have lost the plot. And I think Luke was correct when he labeled V30 malware at this point. So I'm still extremely optimistic that this is a self-healing event for Bitcoin. We'll figure the shit out. And by the end of the year, we'll have a solid alternative. BIP 110, this guy named Dathan Ohm, which is a really weird name. And I actually met a guy named Dathan recently. So I was like, there's no fucking way I actually met this person in real life. I'm assuming he's Anon, and I don't have the slightest idea what Dathan actually is, but it's a super weird ass name. But the fact that I actually met someone named that was kind of interesting. But he doesn't seem like even like a Bitcoiner. He just, this guy seems like a fucking normie. So got to be just some kind of weird coincidence. But maybe the universe is trying to tell me something. But anyway, he's got a nice proposal. I think this will work out. If it doesn't, again, I think we can do this the easy way or the hard way. If that doesn't work out, then fuck them. We'll just implement the cat, and we'll freeze their transactions, and all the spammers can get fucked, really. And we'll just rug their asses, like they're trying to rug the victims of their scams, and money will go back to being money. So I'm optimistic. I know it sounds like FUD, but it's like, it's kind of like the quantum thing. I think quantum's a nothing burger, but if everybody thinks it's a nothing burger and none of the devs actually work on it, then maybe it is something. But so you kind of have to talk about these things enough for people to fucking take them seriously, and just be level-headed about it, not like panic in the streets type shit. So what's up, Voyager? Happy Friday. Oh, Jesus. I'm like, oh, is it International Fries Day? All right. So with that being said, we got some rolling to do. And let's just go ahead and start at the top. I've only got a couple hundred shares of Tesla in this account, and it's only been on for a week, so this is not ready to roll yet. Hopefully Tesla will hang around and not have too much of a correction before they start printing money with robotaxis. All right, Cypher. I got into this one because it looked like it was turning into a very capital efficient cash secured put situation. They're not really counting this against me. Of course, if the price stayed under 14.5, I would either have to pay to roll to avoid assignment, or just shell out the cash. In this case, it'd be $1,400 a pop, so $14,500 for all 10 of these. And it's been on for 16 days, and right on schedule. It's ready to roll. So let's roll the expirations, and actually let me reshare with no volume. There we go. All right, so let's roll expirations. 42 is close to 45. And it looks like I've already rolled out. What have I rolled out already? Oh, So I rolled these already out to the 15 strike. So let's just do that. That way I can keep them all together. And if I, should I add an extra 4 in here, or should I be peeling off some of these positions? Let's just do the 10 for now. See if I can get a fill here. All right. So that should have given me a little bit of chipped away a little bit of my margin use. Unfortunately, I knocked this down from 50 to 30, but it's time to pay bills again. So I had to withdraw 10 grand. And so I earned about 20 grand worth of premium, but now I'm about to add 10 grand of margin use back in. So 2 steps forward, 1 step back with that. This is good to go. And the strategy position. So I took some pretty aggressive covered calls here. It's just kind of a matter of time before I get this wrong. But as I said, I've been trying to chip away at the margin use. So this is more about my personal situation, not what I think strategy will or won't do. But I'll just go ahead and roll this out to next week. And like I'm tempted to just play with fire again and just roll it out to the same strike. The expected move would be to roll this out to 172.50. I could do that. And just give myself a little extra. That's still collecting more than 1% return on capital, right? So 1% of 160 would be $1.60. And this is 225. So this is like 1.5 times that. So 1.5% guaranteed return for the week, plus upside from 160 to 172, $12 a share. Not quite, somewhere between 5 and 10% call away value. So let's just do that. Oh, we got fills. We got fills. All right. The other 6. Oh, I've got 3 cash secured puts. So let's should I roll this one out to, no, I'd have to pay a debit for that. All right, let's group. CSP2. So I can keep this stuff straight. 1,100 shares. I just rolled 5 to next week. I've also got 6 that I sold a week ago. Oddly enough, the trade price is the exact same as the mid price. So it looks like there's been no theta decay the whole week, but strategy is up, whatever it's up, 5% for the week. Yeah. So the increase in the underlying has basically counteracted the entire theta decay for the week, which is exactly what you want to see in a covered call position. That's like exactly threading the needle. This is complete luck, by the way. All I did was just go to the expected move. There's nothing technical about this. It wasn't like I selected this strike because of something in the chart or whatever. If somebody wants to spend time figuring out TA and they can find some kind of edge, good on you. But the only actual currency in life is your time. So I just can't be bothered. Like, I want to get this done, and I'm happy to just go with the tools that are available. Like, anywhere in between at the money, the expected move to 1 standard deviation, like this is all in play. It's collecting theta. It's out of the money. Generally for 42 DTE or 45 DTE, I prefer to at least be at the expected move or out to 1 standard deviation. You want to be out of the money. The weeklies, I don't mind being closer to at the money because this is more of a extreme theta acceleration play. And with the weeklies, the closer you are to at the money, the more, the steeper that theta acceleration curve is. Now, the reason why tastytrade doesn't talk about weeklies all the time, even though you can collect a shit ton of premium here, is because there's a ton of gamma risk. And the tastytrade folks are comfortable with unlimited risk. Like they'll just sell naked covered calls. Like the risk reward to them is just a numbers thing, and over time they just don't care. It still creeps me out. The next time strategy pumps to 1,000 and IV rank is slammed at 100, maybe I'll think about it. But until something like that happens, I'm not touching naked calls with a 10-foot pole. And so even with this low IV rank, like this is kind of adjusted based on the last year of IV. And so even, for tastytrade, anything over 25 is kind of like in the sweet spot. Over 50 is better. But you can sell if you didn't think, like even if you just weren't bullish on strategy, you could sell to at the monies and collect $500, which is basically 3% return on capital, guaranteed return every week. There's no telling that strategy would stay 160 for the next 52 weeks in a row for you to accomplish this task, but that's pretty ridiculous. Even at what are kind of considered low implied vols, you can still get 150% return prorated out over a year selling out the money covered calls. Of course, it's never financial advice in the first place. But I think if you're as bullish as I am on strategy over the next year, 5 years, 10 years, I won't be doing a lot of this. It's just to discuss how insanely profitable the premium is, even with a deceptively low IV rank. Like I'm getting 1.5% returns at the expected move. At 1 standard deviation, well, halfway between the expected move and 1 standard deviation, I could get 1% guaranteed return. Right up here, 175, 177.50 strikes. Can still get somewhere in here. Can get about 1% returns every week. Of course, strategy could dump to 80, and now at the money would only get you half of this potentially, or half of this number. So these premiums are not guaranteed. It's going to be directly proportional to strategy's price, of course. And the upside risk is if you only have 100 shares, you sell the 172.50, and next week the price is 200. If you can't pay the $2,800, then you lose your shares. So this is not, I don't want to make it sound like this is free money. Like there's downside risk, there's upside risk, and you have to be comfortable with all of those things. So anyway, these have only been on for a week. They're not ready to roll. Started stacking 1080s again. I will eat, if 26 is a dud like 2025 was, these will all expire worthless. If Bitcoin decides to cooperate and we either get the extended cycle that we've all been hoping for, or if You know, we've already sucked it up and experienced 6 months of the bear market, then, you know, maybe just front running the next bull market. In either of those scenarios, it seems like Bitcoin has to do something, something in the next year and a half. Either, you know, the 4-year cycle is definitely dead, but it's either been an abbreviated cycle, you know, maybe like a 3-year cycle, and we're basically have suffered through most of the bear market already, so it's time to start stacking. Or this has been just kind of like a choppy crab walk through a lull in the extended cycle, maybe a 5 or 6 year cycle. And in that case, it's still time to stack for the second half of the run. The only scenario where these do as poorly as they did in 2025 is if we had an abbreviated cycle in the middle of just insane deflationary pressure from AI, meaning they have to money print to counteract all that deflation. We are, you know, we're bombing Iran, we're fucking bombing Venezuela. We can't even afford to live in peace. We sure as hell can't afford to live in war and conflict. So every, you know, it's morbid, but every fucking bomb they drop is just the money printer going burr even more, right? We can't afford the interest on the debt. We sure as hell can't afford the interest on these bombs. Yeah. It kind of sucks to think about there's people out there dying, and but the reality is all of that shit costs money. And as far as I can tell, the purpose of war is specifically to destroy wealth and to justify the money printing anyway. So that's my conspiracy theory version. So yeah, anyway, so if we think that somehow during historic pressure for money printing, like we're going to continue to be in another bear market for another year, just sounds as near to impossible as any scenario that I can imagine. However, Bitcoin can do whatever the hell it wants to do. The market is completely irrational. The stock market, um, you know, Bitcoin whales decided to sell. You just never know what the hell's going to happen. Maybe this spam situation doesn't get resolved, or some degenerate pervert gets CSAM on the blockchain and Bitcoin crashes 50% overnight. Who fucking knows, right? So just because I can't imagine a scenario where Bitcoin doesn't go, you know, go nuts this year doesn't mean that there aren't other people who can imagine such things and make them happen. So anyway, I'm bullish. I've been stacking at some attack the tail type shit. That's the point. Long story short. Not ready to roll. The cash secured put is down about 25%, so maybe another week or two on this. Poor man's covered call, not ready to roll. Another poor man's covered call. Getting close to roll. Sold it for 520. Would really start looking at this around 260. If it's still at this number next week, if I don't want to expose myself to any gamma risk, I can just roll it, maybe for break even or something. And then this is the cash secured put that I just dealt with. So that's all she wrote in the main account. What's up, Buffalo? Shirley Fortress says Death WPLS is breaking out. Chart on Dex screen. Do your own research. Okay. I have no idea what that is. If it's not a Bitcoin derivative, then I'm not touching it with a 10-foot pole. If it's, some kind of TradFi thing, good on you. If anybody out there wants to take a look, I wouldn't have a fucking clue. All right, the IRA. So it looks like my 1650 covered calls got wrecked. So if I do nothing, these will get called away. Same for the 17s. If there's enough premium here, I could potentially roll this out if I don't want the shares to get called away. Or I can just close the position right now. I'm just gonna leave this open and come back to it. The iron, I decided I wanted to try to hang on to 100 shares. I think I had 2. So I'll let the first 2 get called away. And the 48 strike is already getting threatened, but there's, another couple of weeks that I can deal with this. But I don't have to rush, so I'll just kick the can down the road on Tesla. Or excuse me, kick the can down the road on iron and move on to Tesla. Same situation here. 2 days ago, I rolled this out to the 490. The price is rallying, so that's nice to see. And I think I was stacking some debit spreads. Let's see, the trade price is 158. So if I were to close these, what could I get? I could get 163. So, I mean, I don't know, what is that, up 5%? That's nothing. But at least it's not down, so that's nice. But no real actions to take for Tesla. Strategy. I didn't have any weeklies in this account, so just doing the 45 DTE thing, out of the money, a little bit of upside, a little bit of guaranteed premium, kind of making that a little bit of a balanced position. And then this was kind of just for fun. I really hate the debit spreads for strategy because getting one leg of a spread to fill is not that bad, but once you start adding 2, 3, 4 legs, the bid-ask spreads just get really crazy. Something a little bit more liquid, like a Tesla, makes more sense for those, in my opinion. So earnings for Tesla's January 28th. Probably need to pay attention to that if I'm doing any credit spreads. Earnings for strategy, February 4th, supposedly. Sometimes these dates are not correct, so don't take that as gospel. Anyway, long story short, not ready to roll. Grab the debit spread. And I've got a couple of poor man's covered calls that are doing okay so far. So far, it looks like the covered call premium has been enough to counteract theta decay on the long calls. So that is good. You can see that the net theta is positive here. $20 to the good. But yeah, not ready to roll. So another week or 2 here as well. All right, so I said I was going to come back to this one. How much cash do I have? $80. If I close this position, it's going to free up $1,600, another $1,700, so that'll be a little over 3. I've got 16 shares of strategy, so that $3,000 plus 1,600, 4,600, maybe $5,000. That's getting kind of close to being able to add one more poor man's covered call here. What's my trade price on Cypher? So it looks like my average cost for these shares is 16. But of course, I've been collecting premium, so the true cost basis has got to be much less than this. But even getting called away at 1650, worked out pretty well because I'm making 50 cents per share profit on the share price alone, plus I got paid 72 cents. So my cost basis is at least lowered down to 15.30 here. So maybe I will close just one of these. It's going to give me some cash. If I close the other one, let me just see what I can put together. Yeah, I'm going to close this one. You know what, I might not need to. If I close iron, that gives me 4 grand, 5 grand. It gets me closer to the money that I need for this poor man's covered call. So I need about 6,500 for that. If I roll this out for a week, is this the only account that I have iron? Yeah. Okay, so let me try to hold on to that. Yeah, let's close this position. Let's see if I can get enough cash. If I sell my 16 shares, where does that get me? 59. So that is gonna be cutting it pretty close. Let's see if I can make it happen. All right, 42 DTE. Let me just go to selling the 190. So that's going to give me 580 bucks. So my long call has to stay under 6,500. Does that actually work? Oh my God, just barely. Okay. So added a little bit more leverage there. Let's just double check. So my net theta on strategy positions total is 56. So that's positive. That's good. I lowered my share count. And so those 16 shares do not have unlimited profits now. But, oh, so now I have kind of like a hybrid situation. So I chose the same exact strikes that I had for my traditional covered calls, but one of these actually belongs to this one. So that's a little bit of a pain in the ass. I'll just have to kind of pay attention to that and make sure that I don't forget. Maybe I'll ungroup this. $10.80. Yeah, I think this should be obvious that I've got 200 plus 3 positions is 5 total longs and 5 total shorts. So next time I look at this, hopefully I'll remember what the hell I was thinking the week before. This is probably a good reason why new option sellers or anybody who, if you're making money and then shit starts to go south and you're like, wait a minute, and have I done something different? Keeping a trade journal can be a nice way to track your wins and losses and your thought processes on why you did certain things. I used to keep one and I stopped at some point, and this is kind of mostly automatic for me at this point. So it's just one more thing to take up my time. So I cut that process out. All right, my personal account. I think this account's worth about $5,000. And I've got, so this is also a margin account, but I've also, I'm obligating 3 and 26, about $5,600 in collateral here. Plus I own a couple of strategy long calls that cost about $1,500. That's already up to what, $7,000. Plus, what the fuck is this? Oh, uh, call debit spread. I shit myself for a second. I'm like, why did I sell 2 covered calls 524 days out? Yeah, I made a nice little debit spread here. So a bullish position, hoping that that Tesla will moon. Yeah, so even though it says I have $2,500 in cash, that's not true. I'm actually trading, beyond my means here. There's some margin use here, even though the algorithm is not taking it into account. So might pick up a few shares of something. Not sure if I can afford them though. Anyway, 28 days to expiration. This is getting pretty close to being ready to roll. If I rolled it out 2 weeks now, I could roll it out to 15 for a smaller credit, almost nothing, or to 16 for a little bit of a credit. Maybe I'll just hang on to this one for another week. I'll let it decay a little bit more. If I roll it on Tuesday, that'll be exactly to 45 DTE. Not that that technically matters. Anywhere between 35 and 52 is probably also pretty reasonable. Yeah, nothing really to do here. All right, the 5K account, what's expiring today? So I put on these Strive covered calls and they look safe for now. Now, Strive could pump late in the day and I could end up losing these shares. That's not the end of the world. And so, on a small account, you have to be extremely efficient with this stuff. Trading penny stocks is kind of dangerous to begin with because when this was trading at like 75, 80 cents, whatever the hell it was very difficult to even get any premium. So you're just bag holding. So when this pumped to $1, I was like, cool, I'm going to grab 7 cents on my $100 position, which is 7% returns for the week. Now, the reason why I said you have to be very careful is the bid-ask spread here was 7 cents and 8 cents. So I had to take the 7-cent price in order to get a fill. So I already lost $1, potentially. Not literally, but kind of philosophically. If I want to roll this, it's going to cost me $2. $2 of my $7 of profit to roll this today. Now, when I'm rolling strategy for, $200, $300, $400, this dollar doesn't matter. That's only like 0.5% of my profits. But if I only made $7 and I'm going to lose 2 of it to roll, it was 2, or even if it's just 1, like 1/7 is 15%. Yeah, 15% of my profit is kind of losing to slippage, getting in and out of these trades. So I can avoid losing that 15% by just letting this expire, except that if the price pumps to 101, I lose the shares. And then in addition, maybe I lose 2 cents of theta by Monday when I want to put this trade back on. So this may be just kind of a wash, but just kind of keep in mind, if you're, I don't want to say if you're so broke that you're dealing with these cheap stocks, but if that's all you can afford, just know that you're kind of running against the wind, because these bid-ask spreads are huge compared to the small premium that you're collecting. Collecting 7% a week is insane. Like, that's ridiculous. 7% prorated out for 50 weeks is what? 350% returns for the year. If Strive is still at $1 a year from now and you collected 7 cents a week, that you would have collected $3.50 on a $1 stock. So that's kind of ridiculous. That's all just theoretical, and it's like you're not going to get those type of returns. Not just because of the bid-ask spread, but for the last year, when Strive was trading down here, you're not getting any premium between, in this area. And then again, when it was trading at 73 cents, you're probably not getting any premium here either. So if the price of the stock doesn't cooperate with you, there's going to be, you can get stuck bag holding. With stocks that are like $10 and up, I just refuse to bag hold. I'll sell covered calls under my cost basis. I really just don't give a shit. But if you can't get premium, you can now, fortunately. I can roll these to next week and get another $7. Actually $6. Because if I want to fill, I'd probably have to go down to the 6 cents. Plus, I'm going to lose $1 or $2 on the bid-ask spread, closing out my position. So I think I'm just going to tempt fate and let these expire, hopefully worthless. And if there's still some meaningful premium to be had on Monday when the market opens, I'll grab it. Otherwise, I will pat myself on the back for collecting $7 per contract and knocking my cost basis down from what? From like $1.70 or something, $1.50. Yeah, $1.43. So I basically knocked my cost basis down to $1.36. So I'll pop some champagne. for that one. Okay, so my Cypher 1750 call is just barely out of the money. I guess this, yeah, as long as I've been talking, this has been coming down. So I can roll this to next week. And I could be as aggressive as the 1750 strike again. Collect 85 bucks. That would be an insane return. That's like 5. It's like 5% return for the week. I don't think I need to be quite that greedy. You know, at least maybe that 18 is still 3.5% returns. A little bit of upside. That'll give me a little bit of breathing room here because I think I had precious little buying power. I think I had like $2 in buying power or something ridiculous. So that'll give me a little 50 bucks. I can at least have enough money to roll my other positions. Cypher and Wolf, I need to get with my brother-in-law because with the prices going up a little bit, these are probably ready to roll. All right, my Tesla 440, 435 credit put spreads. There's only 21 days left on this, so I probably should try to roll this. Let's see if I can do this without having to pay much of anything. So these expire 130. I've got the 440, 435. There's no roll this position here like there is on Tasty Trade or for the single leg options. So I'm going to have to do this manually. I sold the 440 and bought the 435, so I'm going to have to buy the 440. Am I saying that right? Anyway, I gotta do reverse. Oops, January 30th. All right, so I sold the 440. That means I gotta sell the 435 and buy the 440. That would cost me $2, which is counterproductive since I think I only got paid like $1.50 for this. But if I roll out to here, let's see, I had the 440. If I try to just keep the strikes the same, yeah, I can get away with this for, oh, a tiny credit. Okay, let's just try to do that. Wait, that says low fill likelihood. Probably have to put this back in for a little cheaper. Yeah. I'm basically trying to get 4 legs filled, so I have to satisfy the bid-ask spread on all 4 of these. The 2 legs to close and the 2 legs to open. So let's just try to collect like 0.1. 1. Probably could have gotten filled at the 0.1. Let's try it. Let's try it one more again. Yeah, this should fill because I'm literally hitting the bid. Unless this is a 10-cent debit. Okay, cool. I got it done. So I rolled this out. I gave myself a little bit more breathing room on time. Maybe give Tesla a chance to recover and actually profit off this position. Keeping this under 21 days would be exposing myself to more and more gamma risk and losing the whole $500 on the spread. So I like kicking the can down the road, giving myself a little bit more time here. Yeah, bought these $5 calls. These are dust. These will expire worthless. I did get one strategy, kind of speculative, maybe 20% out of the money debit spread here. Grabbed a couple of Tesla debit spreads, plenty of time left on those. Well, not plenty of time. It's only 5 months left. So not plenty of time. Speculative, Strive purchase, 5 attack the tail, $15 strikes out to 2028. So if Bitcoin cooperates, if Strive is able to hammer the ATM on SATA, which I'm assuming, I don't have any insider trading knowledge, unfortunately, but I'm sure they're hitting the ATM above 95. They hit the ATM. I don't know if it was just a test run or whatever, but they collected like $1 million. They bought $1 million worth of Bitcoin with the SATA ATM when it hit 95. So the fact that it's climbing up towards 100, I'm sure they're dipping a little toe in here somewhere. So would not surprise me if we see Strive's total pref outstanding was 200 million. So they bought like 1.27 or sold 1.27 million worth of SATA. And maybe I'll try to remember what this was. So they had 693. I don't know why their Bitcoin now would be fluctuating. But if these numbers go up, then that means, they're ATMing and buying Bitcoin with it. So that'll be nice to see. Their amplification ratio is at 29. There's no reason why this can't go to 50 because 20-30% was like convertible bond levels. And this is a much safer position to take. Seems like they should be able to, what the hell is this calculation? They're actually giving you the calculation. Total capital stack, debt plus preferred as a percentage of Bitcoin NAV shows the total capital amplification treasury. That's kind of cool that they actually are giving you the calculations, how to figure these numbers out. But yeah, we'll be coming back to this, I guess. We'll see if this number keeps climbing. If this number should keep climbing. Maybe I should write it down. I'll start a big ass spreadsheet like Jeff has for for strategy. Maybe I'll have the debt spreadsheet, the Strive debt spreadsheet. Is this number climbing in real time? Are they literally ATMing right now and showing their Bitcoin NAV increasing? What was this 2 minutes ago? Wasn't this 693.5 when that was dropping? Okay. So what is this formula? Bitcoin NAV equals Bitcoin holdings times the price. Okay, so okay, never mind. So this is fluctuating because of Bitcoin's price. That had me shook for a second. I was like, holy shit. Are they literally ATMing right now and showing us their Bitcoin stack in real time? Yeah, this is just Bitcoin's price fluctuating. That caught me a little off guard. I got way too excited there for a second. Yeah, thanks Buffalo. Thanks for talking some sense into me. All right. But yeah, so next week, if this number is higher, we know they were ATMing. Plus, there will be 8Ks, but who wants to look at the fucking SEC website? Combing the SEC website for their freaking 8Ks. There's a ton of them too. It's kind of crazy. Like every time somebody from their company tweets and mentions the company, like they have to file something with the SEC that somebody said something about something, and it's kind of crazy. Kind of dashed my hopes for starting a publicly traded company one day. It's like, do I really want that headache? Not really. All right, cool. I think that is it for the day. Hope everybody has a